Hello traders everywhere, Adam Hewison here, coming to you from the digital studios of Market with your midday market update for Wednesday, the 26th of June. Well, the big news, I guess, is the revision in the first quarter GDP from 2.4% down to 1.8%. That's quite a revision, but the market's moving higher today for a lot of stocks and the market itself. So let's get started taking a look at the markets, and this gets back to what we talked about before, and that is fundamentals versus technicals. The fundamentals, in my humble opinion, tend to lag what the market's actually doing. So let's go right to our charts and our portfolio. And I put into Amazon. I want to take a look at Amazon today. It's looking very interesting. I want to share that with you. So let's just go to the Dow, starting with the Dow. And you can see pretty much, I'm going to go to just a 3-month chart. You'll see what's happening. So we sort of made this low. We were very oversold. Remember, we talked about the potential, a little bit of a divergence here. You know what divergences are? Basically, when the market price-wise makes a new low, like it did here, made a new low here, but the market momentum did not make a new low, and prices going down and the divergence, the momentum going up. So we sort of made a little bit of a turn here. How far we can go back here remains to be seen, but one really nice tool you can use with MarketClub, we've talked about this before, is our Fibonacci. So click here, drag to the lows, and we could get back to the 15,000 mark. I think that's going to be a very, very important level for this market. We'll see how it plays out, but generally speaking, the trend, the overall trend, is positive. Longer term, the monthly, the weekly, is negative, and I think that's the important thing. You should be on the sidelines with this market, and that's indicated with a 55 reading, plus 55. And if you haven't seen our Talking Chart Technology, you had a special video on that yesterday, so take a look at that also. So let's move on to our next market. Next market we're looking at is the S&P 500, much the same pattern there, not really too robust, same divergence, same price action, same score. So let's go to the NASDAQ, which is probably feeling a little bit of pain today because Apple is taking a real hit on the chin here, but 55 there, mixed signals, longer term bullish, intermediate term negative. So I think that's the important thing to remember, sort of mixed picture. You should be on the sidelines in this market. So let's go to our next market. This is gold. Now, gold is very, very much on the downside, minus 90. We've been talking about gold going lower. We're about within $60 of our target zone on gold. We're looking for a 1160, 1170 on the downside, and I think we'll get there. The way the market's shaping up, this is the lowest price gold has been in 3 years. Think about September of 2010. So this is not good action for the bulls. And certainly if you're bearish, as we have been, if we put our trade triangles in, you can see we have been short gold from this level right here. Let me just put from 1377, that was on 6/18, June 18th. That's only 1, 2, 3, 4, 5, 6, 7, 8 days ago. And we've already picked up almost $150. That's $15,000 a contract on one contract of gold futures. So moving on along to the euro. Euro is really sort of fell apart here a little bit. Nonetheless, the longer term and the intermediate term still are positive on this market. So I have to say we're very, very oversold, much like we were here. We may see maybe a week or two going sideways, much like we saw here. But I think, generally speaking, I think you should probably be out of this market for the time being based on how we trade the currencies, on an intermediate basis. You had a signal right here at 133, 129, so we're about 130 now, about 3 big handles ago. I think the best thing to do is just let this market play out, see where it's going, and then maybe take a stance after that. So moving along to our next market, which is the crude oil. This is the August crude oil. This market is trying to build up. It's been basically going sideways for the year. If you start year to date, click here. You'll see really we're pretty much, you can almost draw a straight line across here, pretty much where we started back here. I mean, that's pretty amazing. We just really haven't had any movement. We've oscillated around this line. Obviously, it was attractive to buy it here and sell it over the line, but the reality is this market seems to want to go higher. We're plus 70. All of our trade triangles are positive, indicating that the odds favor this market going higher. It hasn't been there yet. We have been oversold, and I think that's one of the key things to look at right now. So I think choppy markets. A lot of money is changing hands very quickly here, and sometimes that's hard for the markets to deal with. So let's go to our pick of the day, not pick of the day, but the Amazon, who we think is actually going to be dominant. I would imagine pretty soon, somewhere along the line here, they're going to have a Senate hearing on Amazon. Is it just too big and too powerful? Well, we sort of penalize success in this country. They've done a lot of things very well. Jeff Bezos came into this just selling books, and now he's selling everything to everybody, and they deliver it. I had 2 deliveries today from Amazon. They just do a great job. So here's the key level to look at in Amazon. Let's just move our trade triangles, which are plus 100. So let's scope this out a little bit further. And I can get a little closer than that. But this is the level I really think you want to watch. And it's right around here. I would say it's around about the 285 level. That's what I'm saying, 285. If we go over 285, this is what we're looking at. So we'd measure from this point here, and we'd measure from, let's say, the 245. Let me just write this down. So we're going to measure from 245 to 285, and we're going to subtract that. That gives us $40 difference. Okay, so that's the difference between this point right here and this point right here. So it's an approximation, but generally speaking, I think we'll see the market move from, if it goes over 285, then we're looking at 325 for Amazon, and they're a juggernaut, my friends. They're a juggernaut. I mean, it's really, this type of formation really looks as though it wants to go higher. So let's see how it plays out, but generally speaking, the lines are pretty firmly entrenched here on the upside. You've got the 285 level, and then you have this big support level. And if you look longer term in Amazon, let's just clear everything off the screen, and let's go max on Amazon. So you see we've actually been on a strong uptrend since really the lows were made in late 2008. And this market bottomed out before the general market, but it's been on a one-way tear pretty much since 2009. So I think the reality is we're going to see this market actually have a push to new highs. Hey, I'm Adam Hewison. Thanks for stopping by. I'll be back later in the week with another update. Stay cool, keep your powder dry, and let's look for those opportunities with our trade triangles. Thanks for stopping by, and every success. Thanks for watching this video. I hope you found it helpful.